Eastern Time. It would be opening bell, but it is Martin Luther King Day, so happy MLK Day, happy Monday. It is January 16th. This is the trading week for January 16th to 20th. Let's begin with a risk disclaimer. We understand there's risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose, whether trading stocks, options, futures, forex, cryptos. You know the risks. You know the deal. If you're following me on social media, best place to find me is here on YouTube, youtube.com/Chris Pulver, and also on Twitter at Real Chris Pulver. Anything else? Instagram, Facebook, TikTok. I mean, make sure it's the real me. Those are my handles, Real Chris Pulver. Right? If there's numbers, underscores, misspellings, that's a fraud. That's a scam. Just make sure you report all that nonsense to the proper authorities. Okay, let's get into the charts. I'm going to dive into, let's see, I'm going to grab this StockTwits email really quickly from Sunday. A little recap of what we have going on for the week, weekend rip. We have some earnings this week. We have the economic calendar. Let's have a look at that. Last week's movement. Let's see here. Closing prices last week, everything was up. We had some green in the markets. Pretty impressive. This week, we'll take a look at the economic calendar. Earnings-wise, let me click on earnings. Some notables. So let me bring up a screenshot, and we'll say hi to everybody. So I think there's 88 companies reporting earnings this week. Some notables I'll just grab here from StockTwits. Let's see, Goldman Sachs, Morgan Stanley. We had some financials kick off last week as well. Report better than expected earnings. I mean, the big scare last year was that big financials, investment banks were very conservative going into 2023. You know, the R word is being kicked around, recession, right? The Fed has some speakers this week that we'll talk about. What else we have? Charles Schwab, Discover Financial, Alcoa. Interesting. That'll be a nice one. I don't have any stock right now of Alcoa, but we have some credit spreads we've protected prior to earnings. Last week was, trying to think, 3 or 4 positions we closed up for profit. Tal Education, we made some money on that last year. That's a Chinese online education company, Key Corp, little bank play. Netflix, that'll be a big one. I couldn't help myself. I rolled my Netflix stock by a week, so I have a 120 expiration along with probably 100 other ones, and that's not an exaggeration. I just pulled the email this morning from Interactive Brokers, and I had to take 3 screenshots to get it all in from A to Z. So it's going to be a busy expiration week, I think, on my accounts alone. I can check here, but I had like 100 and some expirations due on the 20th. So if I go to my EOD notes and I do a quick search for my 120 expirations, it shows 156 line items for January 20th. Now, that's also multiple accounts, but still, that's a lot of expirations I need to manage. Some of them, not much I have to do. If it's a covered call, I just let it expire, take the full credit for it, lower the cost basis. If there are credit spreads, some of them are so far in profit that I'm just going to let them expire on Friday. But if we have some that are close, I might be looking to take some small debits and just make sure I protect profit, especially if the company has earnings this week. So that'll be a busy week for us in Equities on Demand, which class will be at the top of the hour at 10 a.m. And that is that. So let me get logged into YouTube, say hi to everybody, and hope all of you are doing well. Had a great weekend. All right. So tuning in, Chris hitting the chat first. Good morning. Roz, good morning. David, good morning. Katrina, good morning. Scott, good morning. Mark, good morning. Tom, what's happening, sir? Moch, good morning. Don, good morning. Nice to see everybody. We've got Gary in the house, Marty in the house, Bob's here. Donna, good morning. Ann, good morning. Catherine, good morning. What's happening, Robert? What's happening, Craig? What's up, Craig? Hey, Brad, how are you? All right, nice to see everybody. Cool beans. Hey, Helen. PK, good morning. David, good morning. All right, so let's talk about the markets. So the SPY is sitting at 398.50. Wall Street is closed today. So Forex is open. Wall Street's closed. Have a look at some currency strength. We'll have a look at the economic calendar. I know that we have some news we'll be trading this week in the Flex trading room. We have GDP tonight for China. That'll be interesting. We have employment news out of the UK tomorrow. We have CPI out of Canada. So we'll kick off with little CAD basket trading on Tuesday morning for Flex at 8:30. They're forecasting, that'll be, how nice would it be to see a negative print for CPI? We haven't had that in the U.S. in a while, right? Year over year, especially. So year over year, last print for the U.S. was like 6.5, and we're looking for the trimmed and medium CPI out of Canada being at 5.2, 4.9. Again, both improvements. The CPI stuff for all these different countries. If you look at the previous and the forecast, everyone wants to see lower inflation, right? So it's like you almost want to see red in here to show that it's an improved situation for these respective currencies and countries. That is also kind of slowing the pace in which these central banks are raising rates, which they were super aggressive last year. The Fed is going to continue to raise rates most likely. The nearest rate decision is coming up February 1st on Wednesday. To kick off that week, we also have non-farm payroll on Friday, February 3rd. And looks like February and March are baked in with pretty high probabilities that the Fed will raise rates. So while other central banks do the same thing, we'll see a rate hike out of BOC, which is Bank of Canada, the ECB out of Europe. We'll see anything from the Bank of England, see anything out of the RBNZ, RBA. We'll find out. Big story this last couple of weeks, and really all of last year, was the Japanese yen, as we've seen, traded, discussed, commiserated, celebrated. A lot of crazy movements on the JPY. So with them allowing, this is the Bank of Japan, with them allowing the Japanese 10-year yield to go up through 0.25% and get into that 0.5 or 0.6% area, possibly drifting higher, we might see a change in monetary policy out of the BOJ. So not yet. They're still at negative 0.1%, but you can see here that Tuesday evening, around 11 p.m. Eastern Time, BOJ Outlook Monetary Policy Statement. There is a rate decision here. So it says BOJ policy rate here at the bottom. Likely it's going to remain unchanged, but I'm sure the language is going to be important. So the previous year, negative 0.10, that's been that way since like 2012. So we'll see if that changes. If that does, a little bit of it, I would assume has been priced in. The way that the Japanese yen has behaved over the last couple of months, especially. I talked about this the first week of trading this year when we got back in, started the YouTube session, did the 2023 outlook. I was looking at a lot of these equilibrium levels on the Japanese yen pairs. Like you just drag a big swing from low to high in some of these charts, look at the 50% pullback level, and we're hitting a lot of those. And we also started off this year like right at those yearly pivots as well. So pretty interesting stuff. A lot of crazy volatility. Anything else happening? PPI news out of the U.S. on Wednesday. There's your press conference there for the BOJ overnight, Tuesday, Wednesday. CPI out of the pound, 10.7 previous, forecast is 10.5. Again, is there any improvement? That's a lot of inflation. Double-digit inflation is no bueno. So, I know the U.S. has been trying to celebrate, going from essentially 10% down to 8%, down to 7%. Now we're at 6.5%. Still a long ways away from the Fed's target of 2%, but we'll see. So anyway, CAD basket will look to trade on Tuesday morning and possibly the dollar basket on Wednesday morning if the news is volatile enough. And then Thursday, low and medium impact. ECB President Lagarde is speaking. See if that's a big deal. Panel discussion, Europe new growth. Okay. Credit conditions for the Bank of England, all low, medium impact. Unemployment claims for the U.S., that'll be a big one to watch Thursday. Gas inventories, oil inventories, Fed speaker. Here's Bernard speaking, and also Williams speaking. So we got some Fed talk. They seem to be kind of unanimously in favor of a 25-point hike in February, possibly just slowing those hikes to 25 points over the next couple of months. Looks like that restrictive pause rate's around 5% for the Fed. Medium impact on Friday. Big expirations for me in my options accounts. We have the World Economic Forum. Is that in Davos? Yep. So that'll be some news over the weekend. See how that unfolds. We have more Fed speakers there. Retail sales for the Canada. Retail sales out of Canada on Friday morning. So that's that for the news. Like I said, stock twits. I just showed the kind of notable earnings here. 88 companies, but it's about to kick off. We have a big Q1 earnings season and a couple expirations to discuss. We can flip through some charts. I'm just going to go through some stocks really quickly, then we'll go into some currencies. Apple's on the recovery. We took some profit on this one. We had a 140 by 145 bear call spread, made some money on that. We also protected some profits on our bear call spread For the SPY, we had a 120. It was a 400 by 405. We got filled for 310. I think we collected about a dollar 80 to like a dollar 80 to $2 profit. So we did close it up early, but that's okay. And then we have these down here. I think we took a small loss on the 120 expiration early, and I'll keep the one out here to March just in case. So my outlook on the SPY, and this kind of transcends not just stocks, but also the Forex market. I don't think the bulls are going to be able to overtake this 410 handle on the SPY. So we're coming back into this little pocket right here. There's some pretty decent resistance right at 400. If 400 resistance holds, then we have a couple of their alignments, right? We have 400 is a nice round number. We have the 200 exponential moving average. We have resistance from the channel, which has been pretty obedient for the bears, right? Every time we've run into it, we sell off. Run into it, we sell off. So we've had a nice little, start of the year melt up. And we talked about this the last week in the trading rooms. I mean, are we going to continue to see a bit of a melt up and a bull trap into this 410 handle? Or was the melt up about as good as it gets? And this week is maybe an indecision week. There may not be there may be an absent catalyst of like really driving price lower this week. But we'll find out. I mean, for one, I know in particular, I'm interested in Netflix, which right now we're trading at 332. I have a covered call at 300 to this Friday. So my goal, and I know we have earnings on Wednesday. I think it's after market. My goal is to see that Netflix stays above 300. I'm hoping with this yearly pivot right here that there's a little bit more upside. Maybe we can gap higher than start to fill the gap, but enough so that my $300 covered call gets called away. My break even is 270, so I could walk away with $30 per share and call that a nice win. So hopefully that's the case for Netflix. We've also had a pretty good run on Meta. To the upside was trading at 136. Again, no action this today for Martin Luther King Day. But we have some gaps. We have this movement back into the 200 EMA, which is around 160. We have a yearly pivot around 183. So if we still have a bit of a melt up, stocks recover, it could be in tech. There's an interesting report from DataTrek last week that showed that the NASDAQ was way overdue for an outperformance of the S&P, and it has been doing that. If we go to, let's see, SPY versus QQQ year to date. See if I can find this really quickly. Probably better to search Google. Maybe I should search Chat GPT, right? Anyone using that right now? Morning, Denise. How are you? What do you think caused U.S. dollar drop earlier in Asian markets recovered and peaked? Good question. Let me take a look. Currency strength wise, drop to. Yeah, that's a good question. So again, I'll go to that DataTrek discussion from last week. That is a little range on Johnson & Johnson. Here's the data stuff for the dollar. I talked about this last week during the trading rooms. Basically, we've had these pretty notable declines. Let me box these in so it'll be a little easier to see my notation. So we've had these declines in the dollar, declines in the dollar, declines in the dollar, declines in the dollar. But what's interesting is, although it's like, yes, the dollar's been declining. At the time of this writing, this 6% was from September's high down to like the first part of the year. We measured this last week, and we're already sitting at 11%. So the dollar from top to bottom or peak to trough in the near term has already dropped 11%. You look back to 2021, it was 13%. You look back to 2018, 10%. You look back to 2011, 19%. So obviously there's potentially room for more, right? We could go a couple more percent here. We could go a couple more percent here, obviously, right? I mean, 11% could turn into 13, 14, 15%. So maybe a little bit more decline in the dollar to come. But all that being said, how about this? What's this trend look like? Does it look like the dollar's making higher highs and higher lows? Yes or no? Absolutely. It's hard to deny. I mean, this goes back 16 years. This started in 2006. So from this low to higher lows to higher lows to higher lows. I mean, even with the dollar declining, if we see a base in the dollar, we see another run up. It's hard to deny that, a central bank right now that is still considered safe haven, still one of the strongest economies in the world, and a central bank that's going to be over 4% for fixed income. I mean, it's hard not to see flows coming into the U.S. Whether the Fed wants a stronger dollar, I don't know. But what I see the Fed doing since last year is they don't want to see a stronger stock market at this time because that is the risk of rampant inflation once again. So I could see another rally on the dollar. Like I said, this decline is already stretched out to about 11%. So this number is inaccurate, but yeah, I mean, we're there in a corrective fashion. So a higher low, I think is interesting where we might see some dollar recovery. It may not overtake the highs, right? But I could at the very least see the technicals of a dollar bounce. And the way I'm trading that is I like dollar Swiss long right now. I'm also in the dollar Singapore dollar long, and we can play around with some short-term trading on dollar yen, and we'll see how some of these commodity pairs behave. I mean, China coming back online, lifting their COVID restrictions a little bit or a lot of it is helping those commodity-based pairs like the Aussie and the New Zealand. So I still have New Zealand dollar long as a bit of a hedge just in case the dollar does drift a little bit lower. But I think dollar Swiss long is a good carry trade. I think dollar Sing is a good carry trade and also a good technical range. And then in the 109, 110 area, I'm looking to fade the euro dollar back down. So those are all some pretty big setups looking at some dollar strength in the next, maybe couple months. Okay, but I thought that was interesting. And then the outperformance, I mean, based on some of the standard deviation moves we've seen from the SPY and the NASDAQ, it was way oversold. And a lot of times the NASDAQ and these tech stocks will outperform. And I was going to look for that here. We go to SPY versus QQQ year to date. See if, come on, bro. I'm just going to Google SPY versus QQQ. See if it shows comparison. Performance. Anything year to date, 1 month. Let's see. So the SPY is flat. The Qs are still down. Here we go. Year to date. That's what I was talking about. So there's been a bit outperformance, right? Year to date, 4.8 on the Qs, 3.8 on the SPY. So 1% outperformance. Obviously, there's still a big gap between last year to this year. The Nasdaq was down over 30%. The SPY just got back ahead of that 20% move. It was like 18.35 in the year to the downside, but we finished the year on the Qs, I think, beyond 30%. So, but I mean, Nasdaq over the last nearly 40 years has been the best performing, ETF or asset. I mean, the Nasdaq NDX has been one of the best performing Nasdaq 100 best performing assets to trade. But it comes with a lot of volatility. And with a higher interest rate environment, I still think that there's a pretty solid rotation out of tech into value. So we've seen a lot of that this year in basic materials. We've seen a lot of that in commodities. We've seen a lot of that in energy stocks. And I think that'll continue to happen. Tech recovery is one thing, but I think it's short term. So it's nice to take advantage of it. I mean, we're from 88 to, I mean, if anyone's able to buy some of these crazy lows, I mean, that's a 50% rally in Meta. If anyone's been looking at Tesla, I mean, off the lows, I still have some long puts in Tesla just to protect, but basically from $100 up to 125, I mean, there's a 25% move. Probably can't ignore the movement of Bitcoin the last couple of weeks, right? Last week especially, Bitcoin kind of woke up. Somebody kicked the sleeping dragon, I guess, so it's up 23%. There's some highs to take out if we're going to maintain this bullishness. There's a yearly pivot up here at 26.8, which I think is a pretty good target. So anyway, pretty exciting stuff. Bitcoin, one thing that's interesting to note on the daily is look at the 200 EMA. It's right at it. So we challenged this high. We hit the 200. Is that going to break and close through it and continue to see risk assets dominate here in the next couple of weeks as there's a bit more open space before we have the Fed rate decision February 1st? Or is this a recovery and we stall and we start to head back down and revisit the lows and it's just range? It could. I'm preparing for the range, right? But if we surprise ourselves to the upside and find that yearly pivot, take out these lows, I think there's going to be some traders calling for the head and shoulders. I had my friend sent me a picture last night. They're calling this the inverse Sam Bankman-Friedman. So it's just like somebody drew this, whereas like Sam Bankman-Friedman's little his little afro and his picture upside down. They just called this reverse Sam Bankman-Friedman. So ha ha ha, right? Anyway, that's that. Is the market cap on crypto rising? I don't know. Let's find out. Coinmarketcap.com. See if it's on the up. Go to market cap here. It's up. I think the lows are on 800K. If I zoom, see if I can zoom in here. Yeah, I mean, we were down to below 800 million, or I'm sorry, 800 billion, and we're back up to nearly 1 trillion. So yeah, it's on the rise. Interesting, right? And again, this kind of goes in with just money flows and risk assets. So that's a good thing. I mean, Coinbase is well off the lows as well, which is kind of nice to see. We're at 50 bucks on Coinbase with a pretty decent stretch to 80 $85 to hit this 200 EMA. We have a yearly pivot on Coinbase at 108. So things that could make it a little bit more exciting if we kind of permanently break this trend line and show our reversal pattern. There's a long ways to go to stretch for Coinbase to get to 75 $80. But if we melt up, there's a 144 EMA, there's 200 EMA. We take out this high, we might have some type of structure we can watch in here to find a yearly pivot, but we'll find out. So, we're just getting started. There's a lot to unpack this year. There's probably going to be some surprises. One thing we're hoping is not going to be too surprising is where the Fed is this year. They dominated the markets last year with just their narrative, their rhetoric, their dominance, and we know that yes, they're going to raise rates most likely coming February 1st, coming again March 22nd. But then after that, this is kind of the big question mark. Will the Fed raise rates through the rest of the year? I think this is still going to be CPI, PCE, PPI, ISM dependent, employment dependent. I think a lot of this will just the Fed will have to make that decision. Interesting podcast I caught up on last week. It was the Market Huddle. A couple guys, Patrick and Kevin on YouTube. They do a great job. I love their show. It's long. It's like usually 2-hour sessions, but it's a great podcast. Anyway, just talking about the kind of forced transparency of the Fed, and I just think that they're trying to tell the market a little bit more. But the problem is when they tell the market stuff, the market tends to overreact, right? So the Fed's like, hey, we're going to raise rates. So what the market do? Start to implode essentially. And we had a bear market last year. And the Fed, yes, they did raise rates, and yes, it was aggressive from 0%. But the Fed is also getting into levels where their debt load and their servicing is almost unsustainable. I don't think the Fed can sustain much more above 5% for a duration of 6 to 12 months. Anything longer than that, it's going to be one of our first or second largest budget items for the Fed. I mean, so can they afford to be at 5% forever? No. So that's going to be interesting, right? And that's when everyone's wondering, like, when's the Fed going to pause? When they're going to start cutting rates again? But it's just a stupid cycle, to be honest. But there you go. There's your economics for 2023. Okay, but to answer Gary's question, yes, market cap is rising on crypto from lows of below 800 billion back up to nearly 1 trillion. Still a long ways to go to hit kind of the euphoric bubble peak at 3 trillion. But there's also some bigger players in Bitcoin, right? I mean, I did stay in Bitcoin. I still have my holdings in Bitcoin and Ethereum, and that's my risk capital that I've set from day one. 100% of what I put in crypto, I've got to be prepared to lose, all of it. And that I mean, I've never deviated from that. So it's hard for me to justify putting more in, other than what I've already put in. I've taken some profit with some of those big pushes to 60K and 68K. I've converted a lot of those altcoins into Ethereum and Bitcoin from our holdings, but it's still house money to me. It's still risk capital to me, and it's going to remain that way. So I'm a holder of Bitcoin and Ethereum versus a trader, but I'm also, I don't know. It's hard to have this justify the replacement of everything. If we see a financial collapse or we see systems default, I don't think Bitcoin's going to rise and be like the savior. I think it's going to be taken down with everything else into the rubble. So just food for thought. It's risk capital, you know. All right, let's go through some pairs. I'm going to wrap things up in just a couple minutes, so I'll quickly go through some currencies. Directions really haven't changed much for me. Aussie CAD, if you're bullish, I'm liking profits at these levels. Aussie Swiss, I'm looking to stay bullish. Yen crosses, I'm looking more short term. Aussie New Zealand, we've taken profit in my window there, that 108 to 109 handle. Aussie dollar, kind of my commodity hedge, but technically this looks like we have some resistance here. Nice resistance. We're right at that 7,000 handle. If we see some bearishness this week, I can see the Aussie dollar popping back down here towards 67 or so. So maybe some dollar strength in the near term. CAD Swiss, I like long. If we see some oil recovery as well, if oil starts to get above $80, I think the CAD will join forces with it. We also see a nice yearly pivot up here at 71.50 in a big pocket in that profit window. CAD Yen, I think CAD Yen has a pretty good opportunity to buy it in the short term. I mean, something like this, a little choppy. But the reason I'm not going to jump in and buy it is there's still a lot of this pocket here that could be found. So this could be a little bit of consolidation. Here's what I'll say. If the CAD Yen does this, right, keeps chopping, something around this area here I would probably start looking for a 94 to 9200 zone to start buying the CAD yen. So I may not touch it yet, but we get down to like 93 or 92, find these pockets, breakouts. We have some, some levels to the upside looking for some oversold conditions. So there might be something near term in the CAD yen. Swiss yen, we took some profit at this top green line around 139. Done with that trade. I'm happy with that trade overall. Euro Aussie, nothing. Euro CAD looking to sell it. We're coming back up into these highs at 46. So between 46, 48, 1.50 looking to sell Euro CAD. Euro Swiss, nice little run, bounced off the weekly pivot, got filled in a couple of entries. I'm still taking this up towards 103.50 to 105. Euro Pound, no trade there. Euro Yen, no trade. Euro Dollar, possibly a drift up a little bit higher. We're at 108.21 right now. We have a couple of pivots lined up. One thing we could do is possibly set up a bear pattern and then trade this back down into this clump here. But we could drift a little bit higher. In fact, I kind of hope we do. I hope we get to 109, 110 on the euro dollar, and then we can fade that move with some confirmation. So that would be a pretty simple way to trade, Master Flex. We get a nice deployment here, start to sell around 109, 110, wait for confirmation with our dashboard alignments, and then take some confirmation. So that would be a 109 to 110 euro dollar sell. Pound Aussie, possibly a range trade looking to buy low. If we buy here around 74.50, our current price is looking to deploy bullish. Maybe a range trade there. Pound CAD, hopefully we have a double top. If we have a double top on Pound CAD, I like a sell trade from the highs. Pound Swiss, I'm still long. I'm going to hold, see if we get back up to 1500 plus. Pound Yen, be careful on that one. Pound New Zealand, no trade. Pound Dollar. If we come back and retest 24.50 to 2500, I'll fade that. Look for a short trade in that area. New Zealand CAD, I like this to come down a little bit lower. If it's possible to come down to this yearly pivot, I'm going to look for a buy trade around 83.50. New Zealand Swiss, I'm long on carry. Possibly a bullish head and shoulders. Left shoulder, head to neckline, right shoulder. We break this neckline. Open space to the upside. That'd be a great trade. Positive rollover plus some volatility. New Zealand Yen, range trade. Lows here around 81 to 80 for support. Highs here around 86 to 87 resistance. New Zealand dollar, my hedge right now based on the dollar. Dollar strength, this corrects. Dollar weakness, this pushes up to this channel high. 67 would be a nice target for those bulls. Coming back in this FOMC pocket, but we'll see. This has definitely gotten choppy, right? So it might be consolidating a little bit in here. That's not really a trading zone that I want to take. So I want to see if we continue higher or we correct a little bit more with dollar strength. Dollar CAD, no trade on that one. Dollar Swiss, I'm going to look long. I'm holding long right now. Dollar Yen, we hit that 50% zone. Probably some short-term buy trades, to be honest. We could probably pull back into this pocket area. But like I said, left side of the trend line, right side of the trend line, I'd look to be a buyer down here on 118. In fact, I'll probably start looking at levels at 120, down to 119, down to 118. I'll look for some right side of the trend line and then take a trade on the dollar yen. But I also might not touch the yen and just say, you know what, it was unfun last year. I don't need to put myself in any predicament. And then dollar Sing, I like the setup here. We're at 32. It's been dropping pretty hard, but coming into some massive support. We have some oversold conditions and divergence. So I'm just simply looking at pivot, pocket, and a pattern somewhere in here to pop back up. So between 132, 131, 130, looking to buy the dollar Sing. And that'll do it. It's 10 o'clock. I got to wrap things up, get over into Equities On Demand class for some stocks and options. Yep, thanks, Don. Appreciate that. We're good on the questions. If everyone would do me a favor, we had 75, 80 people watching live. Thanks for tuning in today. We hit that thumbs up button for me. Let's saturate that algorithm. So that way we got 80, 90 people watching, or even if you're watching it video after the fact, for all my West Coasters or people that are non-US, hit that thumbs up button for me, please. And yeah, we'll have a busy week in the trading rooms this week, Tuesday, Wednesday, Thursday for Flex. We'll have Master Flex on Friday, Monday through Friday, Equities on Demand. We're looking to trade CPI news tomorrow for the CAD, US news on Wednesday, and earnings will be interesting this week, Netflix especially. I'm curious if I get that called away. I hope I do. $30 of profit's always a good thing, plus about $84,000 in purchasing power. So good stuff. And honestly, like 100 expirations. So it's going to be a busy month. A busy week with monthly expirations. Okay, thanks everybody. We'll do this again on Friday for YouTube, youtube.com/Chris Pulver, 9:30 a.m. Hope this is okay, doing a little opening bell time. That saves me a little bit of time, not forcing me to leave the gym early. I play basketball early mornings, Mondays and Fridays. So yeah, that'll help me be on time. Cool. All right, buddy. Thanks a lot. Equities on demand students. Let's switch gears. Go back to the trading room for equities on demand, and let's have a good week, everybody. Thanks. Bye.